Okay, everybody, it is a big Tuesday. We're climbing up the mountain. This is the steepest part of the week. It's a big financial news show for you today. Just tons of data and tons of lessons. Molly?
Yeah, it is. It's a mini MBA in a podcast box is what it is. First up, we have crypto expert Bennett Tomlin to break down what in the holy blazes is going on with Terra and UST.
And Luna, this whole thing, and they missed the peg. Something's going on.
Oh
Bennett
God.
is just an amazing expert. And we talk about these stablecoins, specifically algorithmic ones, and maybe this is the end of it, and maybe regulation needs to come and tighten this up.
Yeah. And then we're going to do, if you've been watching Moon Knight, we're going to be like Amit. We're going to weigh the hearts, weigh the souls of some tech companies right now.
Yes.
A deep dive on 5 stocks that are down at least 70% off of their mid-COVID peaks.
Yeah, and we're going to talk about how much cash they have in the bank and what their revenue is. And, you know, as I said yesterday, we're bouncing along the bottom here, I believe, in terms of the crash. So let's look at some facts and let's weigh Coinbase, Shopify, Twilio, Zoom, and Block, formerly known as Square.
And then we may get slightly derailed by some breaking news that Elon is potentially letting Trump back on the platform. So I'm just going to warn you now. Spoiler alert, minor
Molly
derailing.
loses it. I had to pull Molly back. She ran right to the edge.
This is a pretty minor losing it by my standards.
Okay,
but
all right, fair enough. But you went right to the edge. You did put one foot over the edge.
I went right to the edge, but I'm always professional. Always professional.
All right, bring it back, Molly. Don't jump. And finally, we wrap with some Peloton earnings, which are, ouch, really grim.
Ouch. It's going to be a great show.
Stick with us.
This Week in Startups is brought to you by Indochino. Indochino makes custom-fitted suits, shirts, and casual wear at affordable prices. Shop for your next best look or book a virtual style consultation at Indochino.com. Right now, you can get $50 off any purchase of $3.99 or more by using code TWIST at checkout. Vanta. Compliance and security shouldn't be a deal breaker for startups to win new business. Vanta makes it easy for companies to get a SOC 2 report fast. Twist listeners can get $1,000 off for a limited time at vanta.com/twist. And Assure. Assure is the leading provider of special purpose vehicles and fund administration with over 5,000 completed transactions and $2.5 billion under administration. Twist listeners can get 20% off their first SPV at assure.co/twist. That's assure.co/twist.
Hey, everybody. Welcome to the Tuesday show. And this is where we try to climb the mountain, right, Molly?
We are climbing the mountain. I actually said that to my kid this morning when I woke him up. Ooh. I was like, turns out Tuesday is the day you got to climb the mountain. We can do this. Get your butt out of bed.
It's really like, it's the steepest pitch.
Really?
It's the most hopeless time of the week, especially on a week when every company is crashing. This is,
oh my Lord.
As I saw Keith Boy say, like very June 2000 vibes, and I got a little PTSD.
Mm-hmm.
I remember that time. It was just people saying like, can it go any lower? And I was like, yeah, it can. Zero. Yeah. A stock can go to zero. That is the possibility.
And I feel like if it's going to happen, it's going to be in May. It's going to be this month or next month. Like it is bonkers out there. It's just never ending.
Well, they say, sell in May and go away on the stock market. And, people like to take the summer off and not think about these things. So, there is some truth to people might say, you know what, this is going to be a disaster. I'll just get out of this for now. And
yeah,
I'll
I think
look at it later.
There'd be some wisdom to that right now, too. Like if you can do it, just don't look at your portfolio, just barbecue instead. Like, let's just.
Well, I mean, I think if you love the companies you're in and they're printing money and they're high margin businesses or have great management, usually those things are aligned and they have products you love. My general feeling is I like to hold things for a decade. So when I'm looking at Robinhood or Uber or other Square in my portfolio, things that are down, I'm like, still love these companies, still love the management, revenue growing. I'm going to stick with it.
No one should take my advice, and this is not advice, but after our conversation yesterday, like I'd buy more Uber right now. Yeah,
I mean, if they're trading at 1.x times their revenue, it's pretty great considering we look at and are having conversations in our corporate Slack as investors and saying, this is trading at this founder wants 80 times revenue.
Right.
Maybe we should offer them 30 times revenue.
Right.
And then it's like,
and Uber's at
trading at 1.x. And you're like, how does this math work? Well, there's a lot of growth that happens. We're talking about companies making 10K a month, 100K a year, 300K a year. You kind of give them a little credit. You can't have the company be worth, 1.x and it'd be a $200,000 company enterprise value. You give them a little bit of credit. Hey, 30 times 300,000, make it a $10 million valuation. The founders don't get wiped out. There's like a practical reason for that.
Right.
But anyway,
it's different. But anyway,
it's different, but it's not that different because every company eventually gets valued on free cash flow, profits, and as they say, the markets are a voting mechanism and then eventually a weighing mechanism. I don't know who exactly said that quote, but it always stuck with me. I know I heard it first from Bill Gurley and he quoted somebody else, but you just want to know, like, what does this business actually do in the world? And what value does it provide to their customers? And then what is the profit? And the valuation of these companies is somehow trying to look at future profits of the company and say, the future profits of this company is why this valuation exists. If you own this business yourself, you wouldn't sell it for this dollar amount because the revenue coming in the future would be greater in some way. Maybe the next 20 years or 10 years or 30 years of revenue would be greater than the price somebody's offering it for you for today. And then you'd still own the business after you collected those revenues in the next 20 years. And that's how valuations somehow in a market occur. But I think our first story.
Yeah, exactly. Speaking of trying to determine the long-term value of something in the world.
And this something in the crypto space would be something that provides no intrinsic value.
Exactly. So far.
But stablecoins, I guess, do have some value in that they provide a tool for people to move money around without shipping dollars and paying wire fees, theoretically. So we're talking today about a project called Luna. Now, we had the founder of Luna on the pod. It's a stablecoin. It's referred to as UST. Terra is what it is. Now, that is not USDT, Molly,
right?
Which is Tether. That's another stablecoin that's had tons of issues and legal sanctions around them. That's a different project.
Right. We should actually say Terraform Labs is the maker of two coins, effectively. One is called Luna, and the other is called Terra. Sorry, UST. They make a bunch of coins, right? But there's this Terra USD coin that's a stable coin that is attached to Luna in ways that we are going to attempt to break down with a guest in a minute. But this represents in many ways like a real attempt to realize the currency part of cryptocurrency, to actually create a stable coin that could be used as a low transaction cost way to move money back and forth, like actually, make a digital currency that was super easy and cheap to use.
Right.
And along with a broader crypto crash that we're going to talk about a little bit later in the show, the Terra and Luna project, which again was supposed to be stable, like pegged
stable
to
coin. It's in the name.
$1. It's in the coin. You would always be able to get a UST for $1.
Yeah.
Has become untethered, to use an unfortunate pun and confuse us even more from
confusing.
That $1 price point.
Peg. Yes, they call the peg.
Which they call the peg. And even briefly, I think they stopped trading. There's an exchange mechanism that happens to help ensure the stability of this price. And they stopped that mechanism because of congestion and confusion. And that is literally the sum total of what I understand, which is why we were bringing on a guest.
We should get our guest on, because
to help us explain this.
Our guest is I would say, a crypto skeptic. And he writes a newsletter called The FUD Letter. Fear, Uncertainty, and Doubt is what FUD stands for. And he co-hosts the Crypto Critic Pod. So he is a critic, and he's named himself such. His name is Bennett Tomlin. And I interact with Bennett all the time. How are you, sir?
Glad to be here, Jason. I'm doing good.
So you have been on this for a long time. You are skeptical of these projects. I had Do Kwon of Terraform Labs on the pod, and I couldn't get an explanation for him of how this I guess they call these algorithmic stablecoins. They're a little different than stablecoins. We have USDC by Circle, which is really like a, Jeremy Allaire's company, an American company with a lot of regulation, planning on going public. And they seem to have done, I would think we would agree that they've done the most in terms of making sure the one-to-one exists. There's a dollar in a bank account somewhere to the dollar that the token is worth. And Tether, you've been super critical of. We can get into that. But let's try to define what exactly is going on and what is Luna, because there's a staking component to this where people are getting paid 19.5% to give their Bitcoin to create liquidity, to make Lunas that supposedly equal
what? Yeah, what?
These coins.
Basically, Bennett, what?
And that's where I kind of go, who's pegging me? Because I feel like I'm getting pegged by the time I give my coin. I feel like I'm the one getting. Explain this to everybody.
Okay.
Mm-hmm.
Did I go too far with that metaphor? Might have gone a little too far.
I get it. So as you mentioned, there's what I think of as the asset-backed, fiat-backed stablecoins. The more reputable ones being USDC run by Circle or Binance Dollar or Paxos Dollar, which are both run by Paxos, both which have done a much better job than Tether of making sure they had adequate reserves and avoiding the ire of the law. Then there's other asset-backed stablecoins like Tether, which have had long periods where they had insufficient assets. Then in the more decentralized stablecoin space, you have the over-collateralized debt-based stablecoins like MakerDAO, which creates the DAI stablecoin. So there you're putting up extra collateral to get the DAI out, and so it is a little bit more protected because you've got that extra buffer. Algorithmic stablecoins like Luna and Terra rely on a bit of alchemy almost, where...
I'm sorry, the word you used was alchemy.
The word I used is alchemy, yes.
Okay. Not science, not magic,
That's
somewhere in between the two.
That's a real technology word, Jason.
Yeah.
Yes.
I'm just looking it up at Investopedia.
And so the
Nice
Terra
one.
chain is a Cosmos chain that you can run various smart contracts on. And Luna is the base token for that, in the same way that Ether is the base token for Ethereum. However, the difference with Terra is that it has built into the protocol this foundational algorithmic stablecoin idea, which is that if we assume, or if Luna does have value, we can use it as a pseudo collateral for a currency-like token, and that's Terra. And so by going through the protocol, you can always exchange about $1 worth of Luna for 1 Terra, or 1 Terra for about $1 worth of Luna. And so as long as Luna remains valuable, the idea is that it can be used to collateralize the supply of Terra in circulation.
And when you exchange the Luna for the Terra, the Luna is burned, right? It's
or minted if you're going the other way. Yeah.
If you're going the other way. Okay. So that there's always a control on the supply of Luna on either direction.
Yeah.
Okay.
And that right there is also what can lead to what's called the algorithmic stablecoin death spiral, right? Is because Terra is effectively collateralized by Luna, you can hit a point where the value of Luna starts to fall pretty rapidly. And we saw this happen during the depegging, where at one point, and I think still now, Luna ended up falling its market cap below the market cap of circulating Terra. And so there is insufficient demand, insufficient liquidity to actually collateralize the Terra in circulation. The issue with this becomes when the people try to redeem the Terra in circulation and go back to the protocol to get more Luna, the protocol has to keep minting and selling the Luna effectively into a depressed market with a falling price. And so you end up with this dynamic where when that starts to flip, when the collateral effectively starts to lose value, it becomes increasingly challenging for the stablecoin to recover.
All right, everybody. Weddings are fully back in 2022, as I'm sure many of you know. And whether you're the groom in the wedding party or just a guest, you gotta look great. And if you wanna look great, you gotta use Indochino. Indochino makes high quality, custom fitted suits, shirts, casual wear, and more. And with Indochino, you can customize everything from suits and shirts to chinos and bomber jackets at surprisingly affordable prices. And the Indochino experience is amazing. In the store, they do all your measurements. It's very efficient. And you get to pick the fabric, the lapel, the monogram, and of course, the statement linings that I love so much. And Indochino suits start at just $429. and shirts from just $79. If you've got a big day coming up, getting the perfect look is simple with Indochino. Get $50 off any purchase of $3.99 or more by using the promo code TWIST at Indochino.com. That's $50 off a purchase of $3.99 or more at Indochino.com and use that promo code TWIST to get your 50. Get that 50. Got it. Does that mean I can buy Luna at 60 cents and get $1 worth of Terra and arbitrage it? Or do I need like whatever, 1 point whatever Terra Lunas to buy a Terra when it crashed?
So yeah, right now, because it's below peg, what you would do is buy up Terra. So like for say, I think it's 90 cents right now. So you'd spend 90 cents getting your Terra. You'd go back to the protocol and you'd swap that for $1 worth of Luna and do the arbitrage that way. When it's above peg, you do it in the opposite direction and exchange $1 worth of Luna for 1 Terra, which when it's worth more than $1, you can then sell and make the difference there. Yeah, and so if you are confident that you would be able to sell the $1 worth of Luna you'd get for that arbitrage, then there is a reason for people to start acquiring UST on the open market, is the part of the dynamic that's assumed there. Because they want to make that arbitrage. They want that easy 10, 20, 30, whatever percent as it depegs.
So
go ahead, Molly. Yes.
Why should this have worked? Is my question, right? So there's this idea of this algorithmic stablecoin and that will stabilize. Like, was there ultimate confidence in this arbitrage mechanism to ensure that Terra would always stay stable? Like, I'm sort of not sure why this wasn't always destined to come apart.
I would argue that it was probably always destined to come apart. And I think most algorithmic stablecoins are basically always destined to come apart because they rely on this kind of alchemy of convincing people that this thing that should be worth nothing is worth something. And there was even a bit of a tacit acknowledgement in like the Luna community that a lot of the things they were doing in order to grow Terra, in order to scale this up, were unsustainable and couldn't last, right? So this is why subsidizing the anchor yield, right? So Terraform Labs, the company behind Terra, was basically giving millions and millions of dollars to the anchor protocols so that they could pay out a much higher rate to people who lent their Terra than the market actually demanded or wanted, right? And so because of this, a whole bunch of people were minting more and more Terra so they could take advantage of this 19 or 20% interest rate that was being offered at the anchor protocol.
Did you say 20% interest rate?
I did. Yeah, they were offering a 20% interest rate for a while on a stablecoin.
Okay, Bennett, you're a finance guy. Are you aware generally of what the stock market returns on average every year?
It's less than that. Madoff did 11.8% per annum over his run.
When he was cheating, and he was the greatest Ponzi scheme in history. And the market returns 7%, and venture capitalists, over many decades and lots of work in a very small, tiny market relative to other markets, the best ones can return 20% year over year. So here you get 20% for loaning them your Bitcoin, or you buy Terras and you loan them into this pool, and they would give you back 1.2 Terras or another 0.2 Terras for every one you lent every year. Or cash.
You deposit your Terra into the protocol. You get a token that represents the Terra you deposited plus the interest it accumulates while it's there. I think it's called AUST for Anchor UST. And then that represents the yield you're accumulating until you finally
withdraw. Do you get that money daily, weekly, monthly, yearly?
I'm not 100% sure.
Okay.
I'd have to look it up, but it's paid pretty regularly. It might even be paid block by block. I'm not sure.
Interesting. So it's not like you're waiting till the end of the year or quarterly. You're getting it basically in real time. So a bunch of people with money sitting around said, well, if these schmucks are going to give me $1.20 for every dollar I let them hold, I'll let them hold some dollars. So somebody gives them $1 million, they get another 200,000 at the end of the year, more than you're going to get.
Yeah, I think
for many other investments.
Yeah, so there's people go out on the open market and might use their dollars to buy Terra, or might use their dollars to buy Luna and then convert it to Terra. They're not giving the dollars directly to Terraform Labs or anything like that. But yeah, they go out, they get
They're buying the Terra from some other third party who owns Terras.
Yeah. Some other member, likely one of the large market makers, which keep those markets liquid. And so, then they're able to use that to get the yield. And so the Steelman good faith version of what this algorithmic stablecoin was trying to do is that by doing these unsustainable things, by incentivizing this growth, they hope to get it large enough and with enough interest, use cases, and other things for it that they would be able to stop doing the unsustainable thing and people would still think this thing should be worth $1.
So you're saying that they set up a scheme by which they were promising some returns, and then maybe those returns weren't happening. And so then they started to try to incentivize more people to come in and continue to buy so that they could eventually get caught up and return the returns that they had been promising all along.
Okay.
Because I believe I may have just described the Madoff scheme.
They're generally pretty careful to not outright promise a certain level of return in official marketing materials from like Terraform Labs. But there was definitely like a subsidy to help make sure that it would continue to grow and would get larger.
I told you this, Molly. Remember I told you, Molly, though, last week that I knew a poker guy. I think I said it on last week's show.
Yeah.
Who was like, I stopped playing poker because I'm just staking a bunch of crypto and making like more money there than I would in a poker game.
Right.
So continue.
Well, my actual follow-up question is, who are the large market makers that you referred to? What's that dynamic all about?
Well, there's a bunch that trade it just because it's relatively liquid and integrated at this point. But like Three Arrows Capital, Jump, Crypto, and Alameda all are actively trading and making markets in Terra. And several of them were also recently part of the secondary sale of Luna tokens to create the Luna Foundation Guard, which is where Terraform Labs went out and bought, or were going to buy, I don't remember how far they got through it, $10 billion worth of Bitcoin to help support the peg.
So it is really important for founders to understand what SOC 2 compliance is. Basically, I'm just going to dumb it down real quick. If you are a SaaS or a services company and you need to store customer data in the cloud, then you need to be SOC 2 verified from a third party in order to close major customers. If you're not SOC 2 compliant, you cannot close big deals. Okay, we got that out of the way, but here's the thing. SOC 2 verification is brutal. It is time-consuming, tedious, and expensive, or at least it was, but now there's Vanta. Vanta's software makes it way easier to get and renew your SOC 2 compliance. On average, Vanta customers are SOC 2 compliant in just 2 to 4 weeks. That's compared to 3 to 5 months without Vanta. You don't have that kind of time. You're running a startup here. And Vanta partners with over 24 audit firms who have been trained to file SOC 2 reports directly within Vanta. And here's the best part. Vanta is going to give you $1,000 off. Get $1,000 off at vanta.com/twist. That's vanta.com/twist for $1,000 free dollars. Got it.
Okay. Now, here's a chart of that. The LFG reserves. So they had started to build up some reserves in Bitcoin. And these were to back the stablecoin and the Luna token in case it became unpegged. Am I correct? That's the intent of this?
It was meant to be used to perform open market operations to defend the peg. It wasn't like, so it's not like you can't directly redeem your Terra for Bitcoin. You can't directly do anything like that. It's just meant as a pool of money that these market makers in Terraform Labs can use to try to fix things when they break.
Got it. And they raised over $3 billion of this at some point, or maybe it was less, but the value of Bitcoin went up. It was
supposed to end up being $10 billion when he announced it. I don't know how much they ended up actually getting to before things really started to struggle.
This chart says between 2 and 3 billion was in there from January until now. And then they deployed that to, I guess, prop up the sale of Lunas and this basic run on the bank that's occurred the last couple of days?
Or to enable buying and selling, basically, on the open market?
I think it was announced that they did at the very least, a $1.5 billion loan of Bitcoin and $1.5 billion loan of UST to several of these major market makers I think that was on pretty early on Sunday to help try to stabilize the peg. And then since then, there was the other large withdrawal where they moved some of their funds to a separate wallet and seemed like they were getting ready to do another deployment of capital. So yeah, they created this big pool of money and basically tell these firms, go out and use this money to help get this thing back to $1.
Mm-hmm.
Got it.
Okay, so where are we now? We are not at $1, right? We have untethered from the peg.
We were at like 90 cents when I checked it a couple hours ago. I don't know exactly what it's at right now.
I think that's about right.
And then what's the thing with the halted trading that happened?
Binance Binance ended up having a limit on their order books for this, where they weren't allowing any bids to be put in under 70 cents for a while. Mm-hmm. And so because of that, when the market price of this token fell below 70 cents, there was no bids available on Binance. And so trading effectively halted. Besides that, they also halted withdrawals for Terra and Luna, which meant people who had those tokens on Binance could not sell them because there was no bid, and they couldn't withdraw them because those were frozen.
So now that the reserve is gone, Luna Foundation Guard reserves seems to have been depleted. If another run happens, they have no way to prop this up. Am I interpreting that correctly?
Yeah, I'm not sure if the reserve is entirely gone or if they just had to move part of it as part of the structuring the loan or whatever. But yes, it's not a sustainable strategy, right? Every time the peg breaks, it becomes a little bit harder to build up the confidence and faith in this thing again, to convince people once more that they should believe this thing is worth $1 when they've just seen it not worth $1. And so they can use the reserves they have for now to likely bring it back up to $1. I think they've got enough billions of dollars to pull that off for today at least. But you're right that next time it happens, next time something like this occurs, they can't do that again, right? Because the money's gone, the money's been spent. Or even if they have enough to do it next time, what about the time after that? And so, yeah, it's not a sustainable strategy for them to continue to use their reserves in that way.
Who's the bag holder here? Like, who's losing all their money?
Retail investors who got into Luna pretty late. Before the ICO of Luna, there were private sales to about a dozen venture capital firms, and those were done at 18 cents and 80 cents per token. So they're still very much in the green. I think Jump Crypto, Alameda, and Three Arrows Capital were the big three who participated in the Luna Foundation Guard secondary sale, which I think they might be in the red right now because I think that sale might have been priced higher than $30. But the people most in the red right now, most getting screwed, are the retail investors who got in a little bit later.
I think I just figured something out, Molly. A bunch of venture capitalists bought Luna tokens for 18 cents to 80 cents. Is that correct, Bennett?
Yes, that's absolutely correct.
So they buy these dollars, or what's supposed to eventually become $1, right? It's supposed to peg with the actual stablecoin.
Luna is the governance token. Luna is the staking token. It's the base token for the chain.
Yes.
And then you can burn the Luna to get Terra.
Right. It's supposed to be but it's supposed to be at $1 eventually. Is that correct? It's supposed
Terra is. Luna can be at any price. And
got it.
Yeah.
But if you have Luna at 18 cents and you want to arbitrage it for that Terra at $1, you make money.
No. Because if you just end up having to burn like 5 Luna to get 1 Terra, right?
Got it. It's a literal exchange with an exchange rate.
What is Luna trading at?
Got it.
$30 or so right now.
So they got in at 18 cents. Luna went up, and Luna
peaked at like
was as high as like $90, right? At some
point,
peaked
at like 115.
Wow. So am I correct in thinking that the people who got in at 18 cents, whoever they are, they now are up? Just trying to do the math here really quick. 10 times 18 cents is $1.80. 100 is $18. And if they were above 100, they were 1,000x in their investment.
Yes.
So they're up 1,000x. They're still up. If it's, at 30, I mean, they're still tremendously up, whatever, 150, 200x. This is extraordinary. In like a year or two?
The ICO was in February of 2019. So the private sales were probably end of 2018, beginning of 2019. So about 3 years.
in 3 years, they were up between as low as today, 150, 200x their money, and as high as 1,000 times their money.
Yeah.
So if they sold all that to the bag holders known as retail, then they'd be sitting on billions of dollars in some cases. And then they want to keep this thing up. They do this reserve. Is that right?
Yeah. Part of the interesting dynamic here is that I don't think any of the major market making firms that were part of the recent secondary sale to set up the reserve were part of the original two private sales. And so you're actually getting at part of the interesting dynamic here is that the early venture capitalists had such a massive price appreciation that I think many of them probably did, at the very least, downsize or de-risk their positions over the last year. And so they're probably okay and can stomach just about any drop in the Luna price. The bigger issue is for the retail investors who came in later, or for the firms that participate in the more recent secondary sale.
If you're an accredited investor, you need to know about special purpose vehicles. So what is an SPV? Well, it's an investment vehicle that allows up to 250 investors to invest up to $10 million by one entity on a cap table. So if you're an angel investor and you got a bunch of rich friends like I do, you could start your own syndicate and power it through an SPV. Here at Launch, we love working with the team out of Shore. They power all of my syndicates, which is the largest one in the world, with over 10,000 members, and we've done hundreds of deals. Ashore is the leading providers of SPVs and fund administration with over $2.5 billion in AUA. And they've developed an innovative software program called Glassboard. This automates the entire investment experience from entity formation all the way to an IPO. Ashley and Heidi on my team who manage the syndicate.com love the interface and use it every single day. To get 20% off your first special purpose vehicle, SPV, I want you to visit ashore.co/twist to get 20% off your first SPV.
I do, Jason, though. I see where you're going with this because I had a similar realization about VCs who are super into crypto recently, just as a side note, which is like, if you take an equity stake in a business that is related to crypto and you get a big token allocation, so you get paid twice. Like, I can see why there are billion-dollar funds going into this. Okay, but back to this specific instance. And I just want to dig into what this means for trust in stablecoins, which you alluded to earlier, because there are these two types, right? There are stablecoins that are specifically pegged to fiat currency and others that are algorithmically pegged.
So I think there's like the subset of ones that are like, they're sometimes called bank coins, right? Like Circle, Paxos, Tether, where the funds are held in financial institutions, at least for the ones that aren't Tether. The funds are held in financial institutions and like they act kind of like a pseudo tokenized money market fund. Then the algorithmic ones are still pegged to the dollar, but rather than having like a pool of cash and cash equivalents, which is meant to support the value, the only thing supporting the value is the arbitrage mechanism against the governance token or against whatever else.
So then how much damage does this situation and these, happenstances over the past few weeks do to the idea of the algorithmic stablecoin? If we assume this is just a market trying to figure itself out here, right?
Yeah, I think it's plausible that this is going to do some pretty substantial damage to algorithmic stablecoins as a whole. They've existed for years at this point. Dan Larimer did it with Nubits back in 2016, 2017, way back. And then we've had tons of follow-ups since then. This one was a little bit unique because it got quite large. The Terra market cap at one point was $18 billion. And then that's not counting the Luna market cap, which was an additional $40 billion on top of that. So between the two, you had like a $60 billion combined market cap for this token system. And they were sponsoring US sports teams. They were purchasing $10 billion of this other asset. They were connecting more. They were trying to connect and use it for payments and all these other things that started to touch the real economy in a little way. And so I think that Terra was just at the point where they were starting to really provoke a lot of interest from regulators and stuff like that. And now that they've gotten to the scale where they're doing that and they're actively failing, I think it's quite probable that their failure is going to bring in more regulatory attention to this class of stablecoins. Besides that, there's another kind of tricky dynamic here with the billions of dollars of Bitcoin that they purchased to support the peg. And that's that they are now in a position where the longer the system is depegged, the more they need to continue spending until they've effectively burnt through their entire reserve of Bitcoin, continuing to sell those into the market, depressing the market, and making it more challenging for the crypto ecosystem as a whole, right? Because so an entity relatively quickly liquidating $10 billion.
You're talking about contagion.
Yeah. And so there's the broader contagion from them selling Bitcoin into a falling market. There's the closer contagion with like magic internet money, which is Daniel Sesta and Amar Dahani, Sifu, created a protocol on Ethereum, which would go through the anchor lending market 10 times, rehypothecating each time to try to get leverage on the yield they were subsidizing. And they used this to create their own stablecoin, which they called Magic Internet Money. And so like last night in the Abracadabra box, we saw a bunch of liquidations in that protocol because there was a bunch of people who had effectively levered up their Terra and were getting liquidated. And so the issue with stablecoins broadly is that by their nature in DeFi, where they're like this very base building block that gets integrated into a bunch of other protocols and other stuff like that, when they fail, they have the potential of taking down any protocol that's integrated them deeply.
Mm-hmm.
It would just be like the dollar failing or a country's dollar failing, and your 401k, your college, all these different applications, retirement, savings, all of those loans, mortgages are based on this dollar, whatever dollar it happens to be, or renminbi or euro. So this is the underlying operating system of many different applications. And so when they fail. So when you mentioned before, there was like $60 billion between the tokens and the stablecoin. I'm wondering where all that money lives now. Who got all that money?
Yeah. Or who had all that? When you say value, was it like...
I mean, crypto is not the world's most liquid markets.
Right.
Yeah.
At no point could anyone have sold 60 billion into these markets and gotten that out of it, right? And so it's the naive calculation of taking the price of these assets and multiplying it by the amount in circulation. And so despite the fact that that was their nominal value, there was never that many actual dollars that went into the system.
There were already, Elizabeth Warren was losing her mind last week over, I guess Fidelity was going to include Bitcoin, I guess, as a retirement thing. And then she was also on the stablecoin thing early. I've always felt like maybe the United States government would like to keep their sovereignty of their currency, and maybe also keep the weapons in the military, maybe also keep the land, known as the United States. Maybe these things together would be important to the United States. The land that we live on, the money that we own in the world and we use, and the planes and the bombs and all that good stuff.
Global reserve currency that affords us a lot of benefit. Yes.
But Bennett, people seem to think that that governments would be like, you know what? It's fine. Create your own money. Compete with us.
There is sometimes this... You're pointing at something which I think is quite accurate and kind of funny, because you'll see it quite often in crypto, where simultaneously you'll have someone discussing the powerful anti-state properties of their technology and how this stands like against the power of the state and the power of the government and everything for that. And then as soon as the government takes like a glance at them, you watch them start panicking and screaming that it's unfair, that the government can't do that to them. And that contrast has always been kind of funny to me, because you're saying you're going to go after the state, you're going to take this whole thing down, you're going to destroy the system. Then the system looks at you and it's not fair. I'm worried that you were exaggerating your capabilities at the beginning.
It's also very interesting because as you described, for example, buying a massive trove of Bitcoin to use as a reserve in order to sort of prop up this system and pump liquidity into this market. And then you describe essentially selling out of the market, sort of like quantitative easing or rolling back quantitative easing. And then you describe, what did you call it? Rehypothecation, which sounds a little bit like buying and selling collateralized assets, a little bit like the 2008 housing crash. Like it sort of all starts to feel like same story. as the first story, right? It's all just still financialization and using a deep understanding of the way that markets move to make money, which to me doesn't sound that different from what our financial institutions are doing now. It's just like a different skin.
I think that there's certainly truth to that, and that much of what's been successful in crypto are basically examples of financialization. And right. I don't even think that's a particularly controversial view in the cryptocurrency community. Like,
but it is ironic.
Yeah, perhaps. But like foundational, like most of like the Web3 think pieces and stuff that A16Z is cranking out daily, is that it fundamentally allows you to financialize all of these different interactions and transactions. Like, that's their investment thesis for this class, is that it allows that thing.
And it doesn't have value without that. Like, at some point, you can create all the like pieces of paper and IOUs that you want, but until you make a bank, until you create the concept of debt, until you attach interest, until you do all of these financialization mechanisms, you can't explode the value.
Yeah. Is that they're trying to capture a whole bunch of what they see as value that's not currently being captured because a whole bunch of these things aren't financialized. And they think that if they can financialize them, enough people will pay something for it and they'll be able to get a cut of that.
So this is all going to be regulated to all heck in the coming months, right? I mean, the fact that we're seeing this, if this thing collapses or if it just continues to be not pegged and people are losing money, all kinds of lawsuits are going to emerge. State attorney generals are going to start filing like New York did against Tether, and sanctions and, countries blocking these. But the US proposed a stablecoin regulation framework, the Stablecoin Trust Act, I think back in April of this year. This is all going to be regulated, and this Meshuggah is going to be stopped. Is it not, Bennett?
I don't know.
In the United States, at least.
Yeah.
I've been covering Tether since 2017. Yeah. It's 2022. It still exists. And so I don't like to put timelines on the US government at this point because they don't move at the rate I thought they did. They've proposed several different frameworks for regulating stablecoins. Most of the ones would bring the fiat-backed, the asset-backed ones into the banking framework somehow, either under OCC's purview or under the Federal Reserve's purview. I think that those are a good start. I think that banking regulators should have purview over stablecoins because they're banks, effectively. They're taking deposits and often making loans. And so I think that that's an appropriate step forward. The question then becomes, how do you effectively regulate something like an algorithmic stablecoin like Luna or Terra, right? The SEC has already subpoenaed Do Kwon and Terraform Labs, but largely it seems related to the Mir protocol, which was built on top of the Terra chain and allowed you to basically create synthetic assets. So you could create a token pegged to the price of Tesla stock and then trade that. And the SEC,
what could go wrong?
Yes. The SEC heard that and said that sounds like it's illegal and sent some subpoenas.
I know bookies will do that for you. Yeah.
And
if you don't like your kneecaps.
Yeah. Exactly. And so the SEC, I think, could go after Terraform Labs and try to claim that the original ICO was a security sale. They could try to crank down in other ways, but it is somewhat challenging to try to figure out the best way to regulate an entity like Terraform Labs.
Yeah. I got a super simple suggestion. Just cap the size of these things until the regulation is clear. Like they can build to a certain scale in like a sandbox, but these things, like this whole idea too big to fail, is just really scary to me. And I think the bag holders eventually wind up being a bunch of consumers and retail investors. And like you said,
coming at projects one at a time, piecemeal like that is that's just like a stupid shooting war that could last forever. Bennett Tomlin, we could probably talk about this forever, but we would only get more confused. Bennett is the co-host of the Crypto Critic Pod and writes a newsletter called The FUD Letter. Thank you for translating this for us today.
Yeah.
Glad to be here. Thanks
for your hard work. I appreciate it.
Absolutely.
A good follow on Twitter, by the way. He mixes it up.
Thank you.
All right. We're going to move on to more news here. All right. We have to get into stocks now. So we really do. The Bitcoin crash.
Speaking
Bitcoin
of
hit
crash.
29,000 just the other day.
Bonkers. That's over half its value in a year?
I mean, I think it peaked at 70. And as the people who are long-term hodlers know, it's a bit of a roller coaster. So 50% pullbacks, 75% pullbacks have happened. And they happen kind of the 50% ones, the 25% ones happen all the time, like every year or two. So they're kind of all in on it. I think a lot of them don't sell. They just look at it as like buy it forever. And if it happens to 10x or 100x from here, like why would you not take that chance? I understand. But they can track those wallets, Molly. And my understanding is 40% of people who bought Bitcoin are underwater now. So this feels like a real tipping point and panic can ensue, which we're actually seeing a similar panic in the public markets right now.
We are. And, let me read you a headline from Bloomberg Markets today. And I quote, "The bubble portfolio is getting absolutely crushed." Nobody mincing any words. Yeah, markets have been down for 3 straight days. I think there's a little bit of a creep up today, but tech stocks in particular have had a $1.7 trillion wipeout. We went through, our producers pulled some examples of some of the precipitous half dome-esque drops, major tech stocks that are down at least 70% from their mid-COVID peak. So we thought we might just go through some of these numbers.
And, just in relating to Bitcoin, wallets with balances of more than 10,000 Bitcoins, according to CNBC, have been selling a lot in the past few weeks. Ultra high net worth people and, institutions. So the people, it's not just the paper-handed recent people. I think there were a lot of stock market people, institutions who were like, yeah, I'll take a flyer on Bitcoin. And now that the, take a flyer days are over, they're like, yeah, I took a flyer. I'm going to either take a modest win or a modest loss now and find something else of true value. And that is going to be the theme, Molly, is where is the actual value in the economy?
Totally. And we have talked on this show before about how you can't help but notice that Bitcoin in particular, and some crypto in general, seems to move in conjunction with the market because it is, in fact, all the same buyers in some cases. And now I'm curious to see, now that there's a drop and a resettle, whether we'll see some decoupling from that, whether it'll go back to sort of purists as opposed to institutionals. But either way.
Well, you said it perfectly, Molly. The people who are the early true believers in it, they don't sell. And they might even accumulate more because they just believe in fundamentally what this technology would do. In some cases, it's religious, it's toxic, those early true believers. And then who came after them to run it from, let's call it 20 or 30 up to $60,000 or $70,000 per coin. Those were the people who maybe don't even understand it. They haven't read the Bitcoin paper. This isn't religion for them. This was a speculative buy. They didn't want to feel like suckers who didn't get in on Bitcoin when it was going to $1 million a coin. All these people were saying it's going to $1 million a coin. They, had very bullish $1 million coin predictions. And so buying at 40, 50, 60, 70 when it's going to $1 million seems like a good idea, right? You get a 20 extra investment, 15 extra investment. Where can you get that in the economy? And hey, those people got 1,000 times. So 15 times seems reasonable.
Yeah.
But at no point did people say, well, what's the underlying value here? I think the early true believers understand the underlying true value of what Bitcoin does in terms of scarcity and, not being hackable, at least to date in the core protocol. So those people are correctly called paper hands. They were speculative. And as they get wiped out, I think you're making a very good point. If that might be when you hit the floor. Because the early true believers are not selling at 20, or 10 or 15 or 25 or wherever Bitcoin bottoms out at. So,
and then the follow-on argument to that is once we hit the floor, then we start to explore what the real value of Bitcoin could be. Because so far, we've probably arguably been distracted by it as an incredible store of value. So if we start to figure out what Bitcoin's real value can be now that there's room to experiment because it's not a, meme stock to the moon, maybe that's when we actually unlock the potential that takes it to $1 million. I don't know. I'm holding on to my teeny tiny holdings. I can tell you that.
I'm a hodler as well. And I think the store of value is a really great one. Just like owning some, gold bullion, could have some store of value, or homes. And, homes have utility as well, and they generate income. So it's slightly different. But the producers did an interesting thing here.
Yep. Love this. Love this.
So you want to know how much cash and marketable securities, basically holdings, how much cash is a company sitting on at the end of 2021? And marketable securities, these are financial instruments that can be quickly converted into cash at a reasonable price, like treasuries or something. So just how much cash do these companies have? Maybe what is their 2021 full year revenue and 2021 full year profit loss? The stock prices were as of 1 p.m. Eastern time on Tuesday. So if you look at a company like Coinbase, it's down 75%, Molly.
Yeah.
From its COVID peak of 357 a share. A lot of venture capitalists on Twitter giving high fives and talking about how much they made. Still at
Luckily,
70.
hopefully they locked it in because...
Well, they couldn't in a lot of cases because of the lockup. Usually have a 6-month lockup.
Yeah.
So they probably weren't able to take advantage of that unless they sold right before the IPO and the year before it. Anyway, Coinbase, still a great company, but their market cap is $16 billion now.
Mm-hmm.
But this is where it gets interesting. So this is why I asked everybody here to tell me how much cash do these companies have? Because I remember from the dot-com era, people saying, do you know this company has more cash than their market cap? We're not there yet. But that was the true sign that things had left any conception of reality. So what does it mean? Well, let's just take this example. I'll walk you through it, Molly, and you're going to have some questions, I'm sure, and some observations.
Mm-hmm.
If the market cap is around 16 billion and they got $7 billion in cash, well, if you take those two numbers from each other, and 16 minus 7 is obviously 9, that means the enterprise value of Coinbase is 9 billion, right? Because you have 7 billion in cash sitting there. So the value of the company, what it's inherently worth, and then the amount of cash, you got to put those two things together, and you can also separate them, right? Said another way, they could buy those $7 billion in shares in a stock buyback, and if they didn't escalate because they were buying them, but if they just traded that money in and had no cash on their balance sheet and they were profitable, whatever, well, they could just retire those shares, right? So you get my point here. Now, the 2020 revenue was 7.8 billion, which was 6x 2020, and their income was 3.6 billion. It was a crazy year, 2021. People were still really getting into this. Current price to sales ratio of 2.2x. Price to sales just means price to how much revenue they had total. So sales is, another way of just saying revenue, top line.
Yep.
And the Q1 earnings are going to come later today. But this is very interesting to me. Do we really think Coinbase is only worth 9 billion? With, that many accounts and being the category leader in crypto. Crypto's not going away. There's a lot of value here. And we're just going to go through a couple of examples of these because I think I said yesterday on the show, we're bouncing, the ball's bouncing, and I'm calling a bottom. I'm calling a bottom as in there could be a little more dips from here, but there's not far to go.
Yeah.
Because if the enterprise value is less than the cash or, it starts to become 50-50 or something like that, you're starting to look at these and saying you're really giving them no credit for whatever product they have in the market and whatever revenue they have, et cetera. And I think that's where we're at. So net out the cash, $9 billion company with $7.8 billion in revenue last year. Forget about this year. I mean, that could go down or whatever. We'll find out. But even if it was just the same, their enterprise value is 1.1 times their revenue. Last year's revenue, it doesn't make any sense, right?
Mm-hmm.
And so that doesn't mean I'm giving you investment advice, but I do think this is my thesis of why we're bouncing along the bottom. The ball is bouncing along the bottom, maybe rolling on. Let's do Shopify. You can do it.
Got it. Fundamentals. Okay, so Shopify down 80% off its COVID peak of almost $1,700 a share in 2021. Its current market cap is $42 billion. Its cash at the end of 2021 was $7.7 billion. 2021 revenue was $4.6 billion. That was up 57% over 2020. Net profit in 21 was $2.9 billion. This does include, however, a $2.9 billion unrealized gain from investment. So really Spotify was break even here. Mm-hmm. Net adjusted net income for 2021 was $814 million, up 40%. Its current price to sales ratio is 9x.
So the 2021 adjusted net income, Molly, of 814, that takes out things that don't happen every quarter and that are not part of the core business. That's what they mean by adjusted net income, right?
Right.
So that would take out two things. What would it take out?
Well, certainly that unrealized gain from investments.
Okay. And then it would also take out stock compensation because people look at the stock compensation as not part of the core business. And that's a polarizing topic, but if you just want to understand the core business, they made some money.
Yeah.
But then that puts their current price to sales ratio at 9.
Mm-hmm. And this is super interesting. We have a good tweet to this effect. analyzing Shopify's value, saying from Dan McCormick saying Shopify at $42 billion is now worth less than Klarna at $45 billion, which is one of roughly 17 buy now, pay later apps that process payments primarily on Shopify.
Got it. Yes.
Yeah.
So, the people who are building businesses on top of Shopify being worth more. So this is the process, Molly. When you're having this panic in the market, there's different holders and different amounts of shares that are floated. So the amount of shares available to the public to trade might be 10% in one company, might be 50% in another. The others might be privately held. And so you do have smaller number of shares available here in some cases. And so the market's trying to figure out what these things are worth. So you might have one company lose all its value, last week, and then it kind of trickles down to the next. And we saw that with the FANGs, right? Or the TANGs, or the MANGs, if we put Meta as the first letter. The MANGs, terrible.
The AMGs, because aren't we taking Netflix out of the FANG now?
Maybe, yeah. I would put Tesla in it, so TANGs. So if you
tags.
Tangs. If you replace Netflix with Meta, you get the N turns into an M. You got TAMGs,
and the A becomes okay. All right.
Long way of saying it took a while for the even the mighty FANGs to capitulate and for people to take some chips off the table there.
Right.
And so this to me is the great unraveling. Now we're in the panic selling mode. Retail is out. Institutions are starting to pair positions. And then that means these companies are left, sitting here going, does this make sense? Because I think we're a real business and you might want to buy our stock. And then the CEOs, as we talked about yesterday, and the companies might do buybacks because they think their stock is too cheap. The CEOs might start buying shares because they think it's too cheap. Insiders might buy shares. And so that will be the sign that we're going to start going on our way up, in my mind. Or that could be a sign. I'm reticent to give financial advice. This is all my handicapping of the situation.
Yeah. I mean, what we're doing now is weighing.
We're weighing. We're doing some weighing. Yes. We're putting things on the scale and saying, does this make sense? Okay, Twilio. We'll weigh Twilio. It's at $95 a share. It's down 77%. It was over 400. Now, should these companies ever have hit those peaks? No. It was the stonks, crazy days where people were betting that GameStop or AMC were great bets to make. And people were manipulating the market with gangs of people. What could go wrong, right? We all knew that this was like crazy, insane behavior. Some people thought it was like fun and playful. And it showed like there were insiders who were manipulating the market. So why can't the, rank and file retail investors also get in on manipulating the market against them? Let's put that argument aside for a second and just realize that it's not a game at a certain point. It's money. I guess you can play games with money like gamble or whatever, or poker. But if we look at this as investment in people's savings and people work at these companies, it would take a little more serious tone here. Market cap is currently $17 billion for Twilio. They have $5 billion in cash. So these companies were very smart to raise large amounts of cash. In an up market, what does a smart management team do? They just take down as much cash as they can because it's cheap to do so. If you lost 80% of your value, that means every dollar you take costs 5 times as much now, or they were 80% off when you bought them previously. You get the idea. Raising in an up market is always a good idea. The revenue, $2.8 billion. And they're up, and they have a loss of $949 million. They spent $1 billion on sales and marketing. Their currently price to sales ratio is 6 times. And so, they're definitely going to be in an Uber-like situation. Uber said, Dara, we covered it yesterday, Molly. Hey, let's just get super serious. If the markets need to see, just cash flow coming in, we're going to just cut things we don't need. And that could include the bottom 10% of employees. It could include marketing spend. It could include office space. It could be perks. It could be, special projects, pet projects by various people in the organization. We're just going to get focused. And so Twilio, pretty focused company. I could see them getting super focused. They got plenty of runway. If they have $5 billion and they're losing $1 billion a year, they have 5 years of runway. They could probably cut that in half and have 10 years of runway, and they're growing. So if they get raised prices, et cetera.
And this is one of those examples too, where I would look at not just the business fundamentals where there's a lot of cash and they're growing and all of that is true. And most of their spend is on marketing. They're also sitting right in the middle of where all marketing communications is going, which is to text, right? As an API that enables text-based communication in an era of Apple's privacy changes.
Good point.
I don't think you can discount this business at all.
And I would actually look at it and say, here's an example of a company that Microsoft, Google, and Amazon Web Services should just buy immediately.
Yes.
I mean, if Elon can go and, make a tender offer for and try to buy Twitter, like, why not go for Twilio? I don't think it's going to ring antitrust alarms. There's tons of cloud computing players. In fact, there's 3 giant ones that we just mentioned. And Twilio would tuck perfectly in with SendGrid. I also think they have Segment they bought. My Lord, would that be a perfect get for Microsoft at $17 billion now? If they give a 50% premium, $25, $30 billion.
Mm-hmm.
Take that off the table, put it part as Azure, and then you've got another $3 billion in Azure revenue, or Google. Such an easy purchase for them. And the next one, Zoom is I mean, I would get on it. I mean, I would be super aggressive in buying things right now.
Yeah, absolutely.
And this next one, Zoom, falls into the same category, like a $26 billion market cap. My Lord, would be an amazing purchase for Salesforce combined with Slack.
Yeah.
My God. Put those two companies together. If I was running Zoom, I would have tried to buy Slack. Put those two companies together. Zoom. Imagine you're in your Slack instance and Zoom is just integrated into it. So when you launch a Zoom, it's a Slack channel.
Yeah. I mean, for crying out loud.
It's the same interface. So
and then you have persistent freaking Zoom chat.
Yeah.
In your Slack channels that's then searchable later. Yeah. I mean, that's like a no-brainer. And Zoom is not going to zero. Like, yes, it's down 82% off its COVID peak, but it's also a verb now.
Yes.
Like, snap it up.
Yeah, current price of sales 6.6x. They also $5 billion in cash. And they're profitable. They got $1 billion in profits. I mean, if I was Slack, if I was Benioff running Slack, I would put, I don't know why, but they make the video features in Slack and the huddles part of the paid product. I would just make it free and do the 40-minute gating if you want to go past 40 minutes, which I think is the number that Zoom still uses, 40 minutes. It turns you off if you're not paid. Why not go with that, like time gating as opposed to feature gating? Feature gating is when you can't use the feature unless you pay. Time gating or consumption gating in products is when you let people experience how great it is and then annoy them a little bit, like, now you got to restart your call. I mean, just Slack should just go right after Zoom. And conversely, Zoom should launch a Slack competitor. If you know everybody's at launch.co or at This Week in Startups or at inside.com, they're all part of that organization. Just give them all a Slack-like interface with channels. Right. And just say, hey, build a channel over here and here's a chat room. I mean, you're already chatting in every Zoom and then everybody does the same thing on Zoom. Did somebody save the chat? Did somebody cut and paste the stuff we put in chat? It's like,
that's
really?
Like absurd. It's absurd that those are, and the chat is pointing out by the way, speaking of which, the notice, Gerald points out, Microsoft Teams does this sort of a Slack plus Zoom workflow. Yes. Which, again, to me is all the more reason to either, like you said, one of these two products needs to build it in or they need to be merged.
100%. Yeah. Square, one of my favorites, down 70% of its peak. I own some Square shares. Well, actually, now it's Block. And the CEO, Jack, brilliant, Blockhead, he's the head of Block. It's down 70% of its peak. Market cap, $48 billion. Looks like a lot of these companies like to keep $5 billion around. He's got $5.2 billion sitting there. 2021 revenue, $17.6 billion. My Lord.
Up 81%. Up 81% year over year.
Something's going right there. That might have been, their forays into the Cash App and the crypto. But we'll see if what happens this year. But net income, $158 million in 2021. Current price of sales only 2.7x. So again, if you're bargain hunting here and you're looking at these companies, you just got to ask yourself, like, does Square have great leadership? Check. Do they have great fundamentals to the business? It seems like it. Check. Great products? Check. Customers love them. Yep. I mean,
I'm worried about this one. I mean, listen, you're worried about Square?
Oh, explain why.
I'm not sure where this company is going. It's sort of like you're doing a pivot now, and I'm not sure where your pivot's going to land.
Well, so that's bad communications.
The pivot feels philosophical and religious. I have not heard the clear articulation of the business reason for the pivot, and I don't know what the path forward is for this company. And so for me, I don't feel 100% confident that I trust the
Okay.
future.
Yeah. They have really two major business lines here. They got the Cash App, right?
Yeah.
That's just basically a way to bank, invest, and to send money back and forth. And that thing has been just absolutely printing money and tons
great.
of people using
Love
it. And then you also have the merchant services, which is Square.
Yep.
Which is like credit card processing. It's a low margin business. I mean, they're all finance, so they're all low margin business technically. But my Lord, has Square become just an incredible phenomenon. You ever see like the Cash App where they'll give like 100,000 in Bitcoin or cash to some artist and say, hey, just hit reply with your Cash App handle and I'll send you money. And it's, like in urban communities and, it has really made inroads that other people haven't made with banking. I think Jack is a genius that way. And I think he's running the Square and the Cash App Twitter handles.
We'll see.
So
we'll see, Minecraft Steve. We'll see. That's what I call him now. Now that he's all in on block. It's just that was a really nerdy Minecraft joke. Anyway.
Breaking news.
That's the one where we're
The Verge says Elon Musk
this.
said, I guess I would reverse Donald Trump's Twitter ban.
I would. I don't really need to think that hard about it. I guess so. Sure.
I felt like it should have been time ban. I feel like banning the former president forever was a mistake because it feels too partisan. I would have just done, okay, he incited violence. People were having an investigation. I would have just done 1 year, 2 years, something, and then say it's going to double, right? So you don't look like it's just thumb on the scale kind of stuff.
I mean, honestly, my takeaway from this is like, friends, don't let yourself be gaslit. What the thing you think is happening is happening.
Yeah.
Sorry. Like this is one of them where like every signal that has been sent is that this is about unbanning Trump. This is about bringing back like this sort of, hard right accounts that have been, it's about appealing to a certain segment of the population online, and everybody who shouts at you that that's not what it is, that's what it is. And it's the same with like the precedent being set by Roe v. Wade. This is just ranty time, but it's exactly the same thing with the precedent being sent by the Alito draft. Like, if you think you can yell at me all you want and say that it's not going to end up at contraception or gay marriage or the right for a company to own your DNA and not you, but like what your eyes are telling you is happening is what's happening.
It's reasonable after watching what happened with this Roe v. Wade opinion. And again, we don't know the exact outcome of it, but it seems pretty clear.
And after watching like who Elon's interacting with on Twitter, and then I guess I'd probably reverse this ban. Like, I'm just saying what your eyes are telling you is the truth.
Dorsey also, Jack Dorsey, former CEO, also felt like permaban was too much. So,
this is not about a permaban. This is not about this is not at all about the specifics of the type of ban.
Permaban just fundamentally undermines trust in Twitter as a town square where everyone can voice their opinion. Oh, it's from Bloomberg. Okay, that's Elon's quote. I don't disagree with the exception of violence and bots and spam and stuff like that. The violence thing is the one that gets me. Like, I think if you just double it, it becomes essentially a permaban, right? Like, so if you get a year for saying something violent or doxing somebody, you get a year. Now you dox somebody again, you get 3 years. You dox somebody again, you get 9 years. Maybe you triple it. It just becomes super punitive. And then eventually it's like, okay.
I mean, that's cool. Like, you and I can totally have that conversation.
Yeah.
If you're buying Twitter to undo that one
Twitter
thing.
Too. He's not, I can tell you he's not buying Twitter too.
Well, that's the signal that is sent here. Like, that is the signal that is sent here, is that I'm buying Twitter so I can undo the Trump ban, so I can undo all of the stuff about anti-vaccine stuff, so that I can undo a brand new little war on disinformation meant to try to like save our democracy and many lives. Has it always been fought the right way? Absolutely not. Right. But is Trump literally undermining faith in our elections to this nanosecond? Yes.
But see, now if you put him on a 1 year, 2 year ban, and I guess this will be our news story for the day, is the breaking news story here. If you do put Trump on this, short leash, where it's, the next ban's going to be, so how long has he been off Twitter now? Is it January 6th? And we're now,
I guess all I'm saying is, who cares? 2 years. Twitter can do what it wants. It's a company.
Well, no, I know, but I like to think about the nuance of the issue. If he comes back and he says the election was stolen and we know it wasn't, and that's does he get to have that opinion? Or is that, I guess this is going to become the question, is like undermining the election. Is it illegal to do that in the United States? And if the litmus test is it's not illegal, then I guess he would be allowed to say, I believe the election was stolen from me.
Sure. Yeah.
So that's not
I'm not even arguing for a permanent ban. I'm just saying that at some point, this is all like, this is not about bots and spam and it's not about bots and spam. Like it's about a hard right turn. And I have questions about what that means for our democracy and our society.
The search for truth is going to be hard. And I'm really curious what this Birdwatch product does in terms of like people's ability to vote and clarify that. So in this world with Birdwatch, if Trump were to say the election was stolen and the consensus note underneath it was Trump sued in 61 jurisdictions and lost 61 jurisdictions. And here's a link to the Wikipedia page, the Washington Post page, the Fox News story, whatever. Like, Yeah. I think our entire society has to learn digital literacy. We have to learn critical thinking. We have to build up an immunity to these, like these platforms have only existed for 15 years, really. Right. They're like, I agree. Think of Twitter, at scale, they've only existed for 10 years.
Right. I think of Twitter and my son. That's what I got on Twitter when I was on maternity leave. Right. So I think of Twitter and my son as the same age. His frontal lobe is not developed.
Yeah.
Not until 25. Neither is social media's. And so we are definitely figuring out how this stuff should operate. And some of that is we don't have any immunity to it as a society, like information and disinformation and propaganda at this scale. And we are 100% trying to figure out how to live with it and what the new boundaries are. But when someone comes along and then just buys it on what appear to be ideological grounds, I'm not sure that's like a healthy way to build immunity.
Yeah. Interesting.
Yeah.
Yeah. I mean,
anyway,
who knows if this deal is going to even close? I'm looking at the stock market and wondering, like, is this deal going to get repriced?
I wonder about that too. I also wonder about the Tesla shareholders and how pissed they're going to be. Like, they've seen it. Well, they're seeing, like, I just mean, I'm not even saying they're right or wrong. I'm just saying, like, you see shareholders right now who are like, A, you seem distracted, but B, you're selling Tesla stock to do this and on and on and on. Like, I do wonder.
Well, Tesla shares have held up, I think pretty well versus the market. And he did bring in all that extra money to lower his I think he cut the margin loan in half. Did I read that correctly?
I think so.
So there's a lot of help. Cut the margin loan down to zero if people keep wanting to invest in it. I suppose more people will want to invest in the company. If he's running it, they'll see it as an opportunity. But man, it feels to me like if the deal was done today, it would be 30% off at a minimum. 30%. The share price was $54. So 30% of that is roughly $15, $16, $16. It means it would be a $40 sale today, $40 a share.
Yeah.
And I wonder what Twitter is trading at today. I think I saw it at $44 earlier. So we'll pull up the Twitter share price.
Let's see the real time. I love the real time 47.
47, right. So this deal should really go at 40. Is that the actual price of Twitter right now, given the market correction? It could be even 35, which it's traded down that low before. And so, people did say that the price was more than fair. That's probably why the board went for it so quickly. But we'll see what happens. We're obviously going to be on that story. This market curve really changes everything. Every dynamic is now on the table. Private markets, public markets, crypto, everything is going to be, what's that term, maelstrom?
Yeah, maelstrom.
It's like a maelstrom right now. Like everything is getting spun around in this crazy, chaotic whirlpool. And some people will get out of the whirlpool and other people are going to get sucked into it and drowned.
God, I mean, really, it is all up in the air. It's felt up in the air in some ways, but there were chunks of it that you could kind of count on. Like the stock market kept going up. Your 401k was okay. How's it? There was so many things that you were just like, well, at least this is fine.
Yeah.
And now it's like, whoo.
Yeah.
The future is 100% unwritten.
Well, and the Ukraine situation, we forgot about that. Ukraine situation. What can I say? The Ukraine situation because I'm referring to situation?
Yes, definitely.
Okay, yeah. So I got that grammatically correct. I really want to make sure I get it grammatically correct every time and I educate the audience. It's not the Ukraine, but it would be the Ukraine war or the Ukraine situation because I'm referring to the word after Ukraine. But Ukraine is referred to as Ukraine.
Totally.
So you superimpose that on top of this. Roe v. Wade. These two things are like, earth shattering for many different people. Europeans are wondering if there's going to be like a war, a nuclear war, any kind of war on their doorstep, or there is a war on their doorstep. And then half the country here feels like they got rug pulled and lost a right from 50 years ago. And then the stock market's crashing. Crypto is crashing. This feels pretty chaotic. And this is all coming out of a pandemic. Good news. Pandemic. And then layoffs. A layoff contagion.
And now we're wandering into a market crash. So like, guys, if you're just at home ugly crying right now, I see you.
You know what?
Okay.
It's important.
It's okay to be freaking out.
It's important also to look at the fact that whatever your personal state of affairs is, I encourage people to look at the joy and love, family, friendships, experiences they've had, and just take solace in knowing like there's always been wars. There's always been pandemics and sickness. There's always been market crashes and recessions. These things will always happen. And people have lost rights and people had to protest to get them back and fight to get them back. And these things are things that occur over the course of history. And it sucks to be experiencing them all at the same time. Mm-hmm. But they do pass. And you need only look at historically, the arc of rights and freedoms have, at least in this great country, resulted in more and justice. The trend. I'm saying it's perfect. No,
I'm actually like feeling total. I'm only smiling because I'm like, this is awesome.
Well, and market crashes, they typically they typically happen over 2 quarters to 6 quarters. We're kind of in the third quarter of this, right? Mm-hmm. So that would argue that it's going to end sometime in the next 3 quarters.
Yeah.
And the war, all the ones that Putin has started seem to resolve themselves and trickle out and, result in some border debates. And as tragic as it is, they have not resulted in World War III. So if you just look at those three things, crypto is some weird thing on the side. We generally can compare those to TWLO mania.
It's part of the transition, right? Like we're in a transitional period in history. And if you have been reading, I've been reading all of those books lately about the cycles of history, the Fourth Turning and the Ray Dalio book. And even just even a casual student of history understands that it repeats time is cyclical. Like horrible things happen and then good things result from those things. And the best you can hope is that you and your loved ones aren't killed in that war, don't lose everything in the recession, right? Like it's interesting that we started the show with our conversation about prepping, but I mean, it is a time for balance, for a strict social media diet, and for a lot of physical exercise to keep those endorphins high because
and spend some time with your family. And when you go and have a beautiful dinner, you make a beautiful dinner with your family tonight, or you go, for a hike, and you take your dog out for a walk, the world's going to seem pretty great. And it is. So
go follow J. Cal and look at his kitten videos.
I mean, the kittens are pretty great too.
I mean, they're so freaking cute.
Breaking news right now. Breaking news. Not bad news. I'm getting a second bulldog. So we're going to have another female bulldog.
I just want to see the videos of the kitty snuggling the bulldog. That is all I'm here for.
Well, we're not keeping those kittens. The kittens are gone.
You are.
We have no. We have somebody adopted them already.
What?
And yes, we're gonna nurse them to 6 weeks, but the person's taking them on the weekends. We keep them during the week. When they get to 6 weeks, the girls will say goodbye. I made a deal with my daughters.
You monster.
I'm willing to run if they're willing to detach and find new homes. I'm willing to run. Wait for it. A literal animal rescue at this house.
Oh,
I will fund an animal rescue because I know kids love animals. Little girls love animals. So I was like, you know what? You guys want to run an animal rescue? I'm all here for it. But 6 weeks with the deer, 8 weeks with the falcon, 6 weeks with the kittens, and then you have to find a home for them. So we can keep them, then you can visit them. But we're going to have the 2 bulldogs. That's enough for sustained. I mean, that's a lot of mouths to feed, Molly. I got to get back to work.
I know. I'm out.
I'm out there too.
I'm outnumbered by dogs. It's exhausting. All right. See, that's a good.
And Rachel always,
reset.
Producer Rachel's a bit of a sleeper. I gave her a little pep talk today privately. I was like, you got to keep bringing these great ideas, but she spent a lot of time on the Twitter. She's doing really good on her Twitter. I'm like, well, how about let's make sure we're producing the show here. I need some of that funny on the show here. It's like you hire a comedy writer and then you're like, why are these great jokes over here? Like you work for the Letterman show.
Right
like
here.
they should be on my monologue, not on your Twitter. So, let's just focus where the paycheck comes from here a little bit. But she says she's going to use
building a brand
for using the light phone. This is the, if you don't know the light phone, it basically doesn't allow you to doom scroll. It's just the phone and you get like your SMS and it's pretty cool, actually.
You got to read the whole thing she wrote.
Oh, she did?
Yeah, I need to hear this. I'll be using this time to pitch the light phone, aka you got to say this. I think the Yassification
of the Kindle Paperwhite. Light phone is pretty dope. Pull the light phone up here. I think that this is something very cool that I might give to my daughters. As their first phone, where they can just get like very simple, call their dad, text, light SMS. It just looks like a really cool. I love the light phone.
Yeah, it's super smart. No social media installed. I mean, this is actually exactly what kids should be getting.
I wouldn't mind giving them also like an Apple Watch with the LTE in it. And then they could call their dad or mom anytime. And they could have some apps on it, some music or whatever, but not be on the open web kind of craziness. If I could have like a watch that I controlled. But yeah. But your son has a phone now, yeah, obviously.
He does. He was pretty early to having a phone, I think, just because of, his parents. I mean, I was like reviewing them.
Yeah.
They were all over the house.
I got to talk to you about how to manage that.
I'm like a little torn on this, because I know that there are a lot of parents who keep the phone from their kids, but I feel like my son knows how to moderate in some ways because he has had one longer. Yeah. I may also be kidding myself, but he doesn't seem to
some
be. Some
kids have them at school and like the back channel I get back of what's going on with the phones is like, ugh.
I mean, the phone is definitely an ongoing nightmare. Like it distracts him in class. He's always getting in trouble for having it out. Like it's a whole
I don't know how you're allowed to bring phones to school. It feels to me like they have to be in your locker. It should not be in your classroom.
I 100% agree. But then they end up using their phones for stuff at school. So
see, that's the BS though. The teachers need to say
that's the BS, and the teachers need to be like.
I've heard this before. Like, they need a camera. It's like, yeah, get them a regular camera. Teach them how to use. That's a great thing to do. Teach them how to use a camera.
Yeah,
like an actual camera with like shutter speed and everything. Like, what a great lesson. They don't need their phones to be a camera. Like, just have a camera in every classroom for $100.
In his middle school, they had the June box. Like, they were like, if you have your phone out, we take it, you get it back in June. Love that. Yeah.
Sweet.
And I think that they should have it in high school too. But I think that's like also when you need to learn some executive function. So I don't really know.
Maybe seniors, All right, let's wrap with one more story. All right, Peloton missed their earnings again, and its stock is now down 90% of the pandemic high. This is for Peloton's Q3 of fiscal 2022. I guess they're on the old non-calendar year for their quarters. Peloton stock is down 93% from the all-time high of $163 a share, which they hit in December of 2020 during the pandemic, where everybody thought everybody would have a home gym instead of ever going to a gym again. And now everybody's stoked to go to All In Summit, get on planes, throw their masks in the garbage, and go to spin class again. It's whether it's accurate or not, the pandemic is over for most. Peloton's market cap is now under $4 billion for the first time since August of 28, when they raised their Series F, their private market, at a $4.1 billion post-money. So of August 2018. So Peloton's market cap is now under $4 billion for the first time since August 2018, when they raised the Series F at $4.1 billion.
And that is a
private. They're back to private.
They're back to
market
private
valuations.
And if we do our weighing exercise like we were doing before, Peloton currently has $1.5 billion of cash and marketable securities on hand. Its price to sales ratio seems to be about 1.1x.
So they're worth $2.5 billion.
So they're worth $2.5 billion. Can we buy them? Just kidding.
Why not? I mean, we do an LBO of this. So run us through what we see on the screen here for their Q3 results.
Yeah. So Q3 revenue, $964 million. That was down 24% year over year, down 15% quarter over quarter. Subscription revenue is $370 million. That's about 38% of its total revenue versus product revenue, which is $594 million, or about 62%.
Can I stop you there for 1 second?
Yeah, definitely.
The subscription revenue is $370 million. If you take out the cash, they're worth $2.5 billion enterprise value, right? We talk about SaaS businesses being worth 20, 30, 40, 50 times. Even in today's depressed market, 30, 40, 50 might be what a high growth one would be. Now, this is declining. So, but I think it's declining because of the reopening. It will increase again maybe next year or the year after, I would bet.
Mm-hmm.
But if they're worth 2.5 billion and they're got 370 million a year in subscription revenue, or is that per quarter? Is that
I
the
believe
quarters?
this is their quarter. This is quarter. This is just Q3.
So that means they have 1.3 billion
in subscription revenue.
Subscription revenue for the year. That means they're trading at 2 times their subscription revenue. That makes no sense. That makes no sense. This is now to the point. I think I might buy some Peloton today.
I know.
This is
because that makes no sense.
Paid subs 2.9 million.
Yeah,
they're worth 2.5 billion. That means each sub is worth $100.
And they're increasing the subscription price. They're talking about rolling the hardware into a more expensive subscription. So they'll effectively have hardware as a service. I'm not ready to give up on this turnaround. I know I have a little crush on Barry, but still.
Yeah. They added subs. Well, that's good. They lost 757 million. So I guess that's the issue here. Okay. So now we know why they're worth so little.
I see. Never mind. None of that.
Well, if their cash and marketable securities are 1.5 billion and they're losing 757 in the quarter, that means in 2 quarters they're out of cash.
Yeah.
That's scary.
That's the math right there.
That is why this thing is. So they basically have to cut half the employees.
So I really am getting a half price Peloton tread.
Yeah, this is
any
really
minute
bad.
now. Any minute now. That's
you might
really
not find it from Peloton though.
Exactly.
I mean,
I keep looking on Craigslist.
1.5 billion. I mean, how do they raise money now? That's the problem when you get into this negative zone like this, when your expenses are so expensive. This is why we talk about runway constantly. We talk about runway constantly in startup land because, hey, your strategy is largely determined by how much cash and runway you have in your growth and all the stuff. So this is a business that's not growing and they're losing a ton of money and they have 2 quarters of runway. So,
I mean, are we really saying out loud that Peloton has 2 quarters of runway left?
From this point forward.
From this point forward, if nothing changes,
right,
Peloton appears to be out of business in 2 quarters.
Well, they could get cash other ways. They could take loans, etc. They could do a secondary and sell more shares, or they could be bought.
Yeah.
So it's not going away.
No, I know.
They also
but I'm
have
just
$1.4 billion in inventory. So they got to clear that out. If they could clear that out, let's say they cut their net loss. I think they can cut their loss in half here. I don't know the nature of the loss here. Oh, so now they actually, just an update here. We had the wrong cash number. Well, no, the cash numbers can fluctuate based on quarter. So it's actually 800 because you got to take the 757, I suppose, out of the 1.5 billion.
Right. So it's even worse.
So this is like a very acute situation.
So they have 3 months to get bought, liquidate that inventory at
raise money
at any cost, or raise money. But
yes.
Despite the joke I made 7 minutes ago, conditions on the ground have changed, and I don't think we should buy them after all.
There's a reason why the stock is getting crushed.
Yeah.
When did the earnings come out? They came out this morning or last night? And then what is the
morning? I think.
Right, so then I would say show us the stock over the last 5 days, because that will tell a pretty interesting story of what people think over the last 5 days is going on here.
Yeah,
and if we look at the last 5 days, so that means, a lot of people it was trading at $18, $19, maybe $18.71 is the high water mark for the last 5 days.
Mm-hmm.
And it went down to $11.67. It's now at 13, basically $12.99. So people are losing faith that they're going to come out of this.
Yeah.
This is what I was talking about earlier today, Molly, is the capitulation that can happen.
Mm-hmm.
Somebody might let's say you had put $100,000 into this during the, when it was at $45 and you're looking at 30K, right? Your 100's worth 30K. You're thinking, I take the 30K out, I put it into Amazon and I get my 70K back, whatever, the next 5 to 10 years. Or I put 10K into Tesla, 10K into Google, 10K into Uber, whatever. There's got to be a company with better management and a better, actually, Uber would be, for me, like an interesting one. If Uber says, hey, listen, we're going to get to profitability. We got a ton of cash. We're trading at this great multiple. Maybe you just take the 30K you have here, you put it into Uber, you put it into Google, depending on your risk. You want to have less risk. You want to have more upside. And that's a better bet, right?
Yeah.
And so this is what is happening in the market right now, is that pure capitulation. Because somebody's looking at this saying, well, if it's at 13 and I bought it at 40, could it go to 3? It could. So my 30K could turn into, whatever, 10K or 5K even. And that's the panic. So it is hard to determine assets for a company because it's not going to be very specific. But if we were to look at their balance sheet, for those of you who are in the Slack room, we'll share the link there for you. Assets, current assets, cash and cash equivalents. We know what that is, right? It's literally cash in the bank, or things like treasuries, things you can liquidate very quickly. We've got 879 of them as of basically April 1st. Marketable securities, they don't have any. Marketable securities would be they owned like Google shares or something. Accounts receivable, this is money they're owed. They say 74 million. This is, I guess, could be people who are delinquent on their account, or somebody owes them money. They don't have a reseller. It's not like people are reselling it. But if you were reselling your products, if you were selling Pelotons on Amazon, Amazon might owe you money,
right?
Or something like that. Inventory 1.4.
Could that be subscription payments too? Like incoming subscription payments?
I don't think that would be listed here because I think you get charged at the beginning of the month, not the end.
Right,
but it could be people who are delinquent, right? So that could be that. Okay, so accounts receivable could also be BNPL, buy now, pay later. So if somebody was paying on a payment plan, maybe that's what that is. Prepaid expenses and other current assets. Prepaid might be, I paid my rent for next year. I paid for a bunch of chips. I paid for the pedals, so in order to keep, the chips in stock or the screens in stock, we bought an extra 100 million worth of them because they're hard to source. And when we got our hands on them, we bought them. So that 200 million is stuff they prepaid for it. That expense would come next year, but it sits on the balance sheet as an asset because you never spent it. Property and equipment, 754 million. This would be, desks, chairs, laptops. Intangible assets. This can include a lot of different things like IP, I believe, would fall into intangibles. Goodwill, again, that could be things like considerations for buying something that has some inherent value. So if they had bought, I don't know, a brand that had some value, right? Sometimes people will buy a brand and they say, well, there's some goodwill for this brand. It's worth 41 million. Restricted cash.
Look at the difference, though, by the way, just as a side note, if goodwill is like assets that you can't monetize directly that include like brand value, then you have to compare it. You can't really move on without comparing it to 2021 when it was, $210 million versus
who knows what that,
41.
So if I'm being honest, I don't know exactly what's in there. I know that's a catch-all. Restricted cash would be like maybe you put down a letter of credit for an office space, but you don't have access to it. So in 2 years, you will have access to it. So that would probably be what restricted cash means. Operating lease right of use assets. So they might have leased factories or office spaces, I'm thinking, but I don't know why that would be considered an asset unless they paid in advance. So I don't understand what operating lease right of use assets means. And then other assets, 39 million. Could be catch-alls for other things. And if we look at Investopedia, tell us what they say.
Yeah, I looked it up. Goodwill so there's a couple of interesting things about this. One, goodwill really is just reputation. I mean, it's like customer loyalty, brand reputation, these non-quantifiable assets. So it is significant that it went from, $200 million last year to $41 million, even though it can't be directly monetized. The other thing that's interesting is that a lot of times companies will combine intangible assets and goodwill into the same line item. But in the case of Peloton, they didn't. They broke them out separately. Yeah.
That's why I kind of nailed this because I said IP. Yeah. So here it says here on Investopedia, copyrights, patents, licensing agreements, and website domain names.
Totally.
So if you own inside.com, it's $1 million domain name on Inside's balance sheet. If Inside were to go belly up, just do it $4 million in revenue. It's doing really well. Profitable.
I can't believe you can I can't believe you can assign a dollar value to reputation and loyalty. That's so fascinating.
I think people can, but they don't.
Yeah.
I don't think that that's a common practice. When you get bought, sometimes people will put stuff into that. So if you're buying a company and it only has like 10 million in revenue and you're buying it for 100 million, you might say, well, 20 million of this is the goodwill of the brand that we're buying. So when we actually got bought by AOL, they had put goodwill and intangible assets for a portion of what Engadget, Autoblog, and those things were worth. They called it goodwill, intangible assets on this statement I saw of how they valued us.
Yeah.
Because it did have a brand that meant something to people. So if you were to buy Nike or you were to buy Star Wars, like that IP, those copyrights, the Marvel characters, like as we have seen, that is a real thing.
There's an intrinsic value to that because people are attached to it. So really, the difference in those two numbers is significant. And also, no matter what, the too long didn't read here, the TLDR is like, they're in trouble.
Oh, and also a great note from one of our producers, Peloton bought Precor. So I actually had nailed that. That could have been like Precor. They bought some asset and it had some value. So it's on
for everybody who's listening, just in case this part isn't in the show, Nick jumped in and was like, hey, can you just run through this on the fly? Because we're not really sure what all this means. And Jason was like, yeah, let me take a stab. No problem.
I picked up a couple of things along the way.
There you go. Your free MBA.
I've never done anything, but, just ride on the backs of my investments. And this tragedy has to stop. This
it's
abuse
a shame.
has to stop.
It's a shame that you just aren't good enough to be in the mob.
This is, I'm not good enough to be in the mob and I'm just riding on my investments. I will say I have ridden some investments. Truth be told, I did ride that Uber investment pretty hard.
I believe that's the intrinsic value of your brand goodwill, Jason.
Well played, Molly Wood. Well, there we are, everybody. We're now at an hour and a half show. Thanks for tuning into This Week in Startups. How do you help the show? You follow Molly Wood. You follow us on the Twitter. You give us a rating. You go to youtube.com/thisweekin and you join in the fun. Every day, we laugh it up from 10 to noon-ish. And you put on, after the subscribe button, Molly, there's a little bell there. You hit the bell, you give updates. You got YouTube on your phone. You're sitting there at your desk. You're on your tread. And you want to hear the straight dope. Well, you're going to get it from Molly and JCal. JMO is here for you to break this all down. Moja is high. Put on the bell. Just hit the bell.
Ding.
And you'll get to chat with us. And then soon, we're going to be doing This Week in Startups Live. In the fall, we did the meetups experiment. That went really well. Lots of energy there. We're going to upgrade that to This Week in Startups Live. And so we're going to come to your town and we're going to do something great with the show live and featuring startups because the show's about startups. And we're going on the road, Molly.
We are. Hot damn.
Who's your favorite? What's your favorite city, Molly? You got a favorite city?
Oh my God. Copenhagen. Let's go.
I do like Copenhagen. I was trying to keep it domestic for now, but...
I'll think of some in New Orleans. Let's go to New Orleans.
New Orleans? And we'll get the chicory coffee and some beignets?
I love New Orleans.
I haven't been there in 20 years. 20 years. But we will tear that place up.